Hi, good
Hi,
morning,
morning.
and good
Yeah,
morning.
Charu, you go ahead. Yes.
Yeah, okay. Welcome to Saxo's weekly market outlook call. I'm Charu, I'm a market strategist with Saxo Market Singapore. But today we have with us our Chief Investment Officer, Steen Jakobsen, and he will kick off with some special comments. Thank you, Steen.
I don't know about special comments, Sharu, but I give it my best. Good morning, everyone. Um, I think we're in for a very exciting week and potentially also a very exciting month for a number of reasons. I make it short and sweet. Basically, what's going to happen in September is that number one, the Federal Reserve and the Global Central Bank has realized that if they need to fail, and they will, it is better to fail because they're too hawkish relatively to being too dovish on the usual language on inflation, transitory and mean reverting. This changes the dynamics of the whole market because, of course, we now need to put in a terminal rate which is higher and a end game where basically the 2023 elusive 2.53% inflation in the US is not going to happen. The second part is that the QT, the quantitative tightening of the Fed's balance sheet, started in earnest in August and will now run into September. It was to the tune about 50, 60 billion in August. It will run up to about 90 billion in September. So we have a continuation of two negative impacting forces that is driving liquidity out of the market. Staying on liquidity, the European energy crisis, which I'm pretty sure most of you monitor, is now developing into what at least European politicians deem to be a potential Lehman moment. To counter this, the Swedish government came out with a $32 billion support for its own utility and electricity generators. Germany came up with a 65 billion support for not only its electricity company but also the consumers. In Spain, everybody can travel for free on trains under the 300 kilometer mile, and overall, Europe is going from a full uh, circuit panic into a mode where basically we're going to see massive, and I will stress massive fiscal expansion in Europe to counter this upcoming winter, and with it, the very high energy prices. We will potentially also see that EU will go all the way to even regulate the electricity market. Of course, one of the things that is missing in the headlines in terms of understanding this is the fact that the energy prices, or rather the electricity prices in Europe, is priced off natural gas, whereas natural gas as a total mix in terms of the electricity generations is on average less than 25%. So we have this conundrum that less than 25% of the actual production prices the 100% of the electricity. The first sort of attempt by EU will, I'm pretty sure, be to disconnect this and make sure that the average price is monitored. But even the average price of the 100% is still too high and will mean that Europe will need to go into a full scale fiscal operation in order to mitigate not only the energy price but also the food prices. Over the weekend, we had massive demonstration in Paris, in Prague, and across Europe going to this point. Of course, today is also the first day of the potentially, or not potentially, the new UK Prime Minister, Liz Truss. I don't expect she will be anything like her hero, which is Margaret Thatcher. But it's kind of ironic that Margaret Thatcher, who sold off all the energy uh, stock that was available to the British government, is now seeing her replacement, Liz Truss, coming in with a policy which mirrors more um, Mr. Trump than Mr. Thatcher. The UK is in a dire straits, and I expect that the sterling will move all the way down to 105 and par with the dollar. So, with those words, are very encouraging for the market this week and this month. I will leave the pass back the baton to the team here in APAC. Thank you.
Thank you, Steen. Yes, and absolutely a tough week ahead, especially in terms of the European energy situation. I'm not going to touch a lot more on that, but I think just switching gears to the US side, and we had the NFP data on Friday, which was supposed to be quite key, but I think of course, it turned out to be a Goldilocks situation there with headline jobs growth just above expectations and slowing down from July's huge number that we saw. There was a little bit of a concern around a higher unemployment rate of 3.7%. But if you consider that we also had an increase in labor participation rate, so there were more job seekers in the market, and that kind of explains the higher unemployment rate as well. So not all that bad, I would say. Basically, it still paves the way for a 75 basis points rate hike by the Fed this month. The inflation situation certainly warrants more focus. And of course, now the entire focus is on the September 13 release. And also with the energy situation worsening a lot more globally, I think even if we do see a softer headline print there, I think the Fed has enough ammunition to actually continue to front load rate hikes and to continue to push back against easing expectations for next year. We did not really see a lot of reaction from the US yields beyond the immediate volatility after the NFP report, but the strong dollar momentum has certainly continued. So we did see weakness across the G10 pack last week. And of course, I think the 2 or 3 key FX pairs to watch this would be the sterling, as Steen mentioned, with the new Prime Minister coming in today as well. I think the markets will be volatile to understand the tax policies and their implications. We also have to kind of monitor the Japanese yen situation after it reached a fresh 24-year low last week. And there's a possibility that we could get a stronger Japanese intervention perhaps this week if that trend continues. Again, I think not touching a lot more on the energy situation, but I think one thing to highlight will be the OPEC meeting today. After what we saw last week in terms of G7 cap on Russian oil prices and an indefinite cut to Nord Stream supplies, which means there could be potentially more demand for gas to fuel switching. So I think oil prices are certainly poised to go higher from here, and that means that OPEC might actually stay away from some production cuts at this moment. But I think there would be a lot more volatility as we get closer to the meeting today, and that's something we should be watching. And lastly, from my side, there's also ECB meeting this week, and there's been a considerable chatter about a 75 basis points rate hike last week. Again, I think the worsening energy situation does mean that we could see a bigger rate hike this week. But Euro USD has been pretty, close ranged between say 99 cents to about 1.01, as it was fighting against these energy issues and the ECB tightening expectations. Now, my sense is again that energy issue is a bigger shock, especially with Nord Stream cutting supplies, while ECB expectations have been largely built in. So it could be more of a buy the rumor, sell the fact kind of thing there. So the only thing that could bring relief for the euro is Europe's emergency meeting, which is at the end of the week on September 9th. And if they go ahead with rationing and stuff, and those are the only potential short-term solutions to this energy crisis. So I think that could obviously potentially help the euro a little bit. But earlier in the week, we could see some further pressure as this energy situation develops. So overall, again, yes, a tough week ahead in markets. So buckle up, and yeah, I'll pass on to my colleagues for the rest of the conversation.
Hi, morning everyone, and thanks Steen and Charu. And as Charu mentioned, and the job report over on Friday in the US is initially gave the market some hope of a kind of Goldilocks situation, not too hot, not too cold, and so stock market rally and bond yield came off, especially the 2-year. Now the 2 years looks actually end the day down 11 basis points, so it has priced out some of the large rate hike expectations since Jackson Hole. And but the longer end is a little change. I mean, 10 years is down only 6 basis points, and 30 year is down only 2. So, and then it's on the stock market, it's pretty much actually since the summer rally, and the market has been trading more on macro factors and on interest rate movement. And so you can see that on Friday as well, and then you also can In fact, you can see that is since during July and August, during that 2 months, and when the market is rallying through July and to mid-August, and but actually, street analysts has been cutting down EPS estimate for the S&P, and during the 2 months, actually, analysts cut the S&P EPS forecast by 5 point for the third quarter by 5.4%, and then for the full year, it will to year 22. The EPS estimate for the S&P 500 was cut by 1.5% during those 2 months when the market was going up. So basically, it's all the whole summer rally was pretty much relying on multiple expansion and pretty much driven by, before the Jackson Hole, pretty much is driven by expectation of lower interest. I mean, some kind of the Fed might take a pause or even pivot. But of course, that was pushed back by Powell and back during the Jackson Hole. And one other thing worthwhile to note, we at Saxo has been very bullish on energy stock. And if you look at the earning momentum, actually in August and in July and August, and when 9 of the 11 sectors are being cut in estimate, but the energy sector for the EPS for the third quarter actually we rise up by 9.6% for the full year 2022, and analysts estimate for EPS for the energy sector in the S&P was revised up by 12.3%. So it stands out as the sectors actually have the strongest earning momentum in July and August. And back to this part of the world, and in Hong Kong and China, and the market has been facing a number of headwinds, and it's the auto sectors has been haunted by some mixed delivery news, and also and then the Berkshire Hathaway has been selling down its stakes on BYD, and actually last Thursday Berkshire Hathaway sold another 1.72 million shares in BYD, and in property market, and Chinese developer continue to be trading rather weak, and those SOE leading SOE names like China Resources Land or and China Overseas, and they also have come down quite a bit, and the earnings from the 136 listed property companies in Hong Kong and mainland, which have reported earnings already, and actually saw their aggregate net income dropped by something like 87% in the first half of 2022. And another headwind we are seeing in China and Hong Kong, of course, is the breakout in COVID and the lockdown especially in Chengdu. Chengdu is extending the lockdown for another 3 days. It's a city of 21 million, and it's the largest city actually in Western China. So it's going to, of course, have some impact. And so investor will be closely watching that this week. And in Shenzhen, there's relaxed a little bit to they announced, but the situation is still very fluid. And this week we have quite a few economic number coming out from China. And the most important probably will be the credit data that will come. Maybe it's not on a fixed day, which will be between the 9th this Friday or next week, but it can come as early as this Friday. And because in July the credit data was pretty weak, loan growth was very weak, and the PBOC actually did unexpectedly cut interest rate, cut the policy rate, and then have asked banks to extend credit, and so market will be watching is what kind of impact will be to be reflected in the August number. And then today we have Chinese PMI, service PMI, and then it's on Wednesday we have the exports number, and from the container throughput data we have seen, and most likely export will slow down a bit, and to 12.3% year on year from last month 18%, and so also the resurgence of pandemic control and also the power rationing also will have hurt export. And then on Friday, we have a PPI and CPI from China. And it's expected that PPI will fall, mainly because of decline in coal prices, and also favorable base effect. And CPI will be quite stable. Will be just maybe edge up, according to Bloomberg survey, edge up just a little bit to 2.8%, mainly because of vegetable price increases. And on the earning front, and this week we will have the most important thing with Bilibili on Thursday, and that will give some ideas of the online entertainment sector in China. And then the other, like Leo and Billy in China. Leo's, I think market will be watching or closely watch their margin, because last time in first quarter they have a rather disappointing margin, and so our investor will be watching the development of the margin and also on the delivery guidance for 2022. The last things and the exciting things is will be from Apple's event this Wednesday. And Apple's adopted this year's event called Far Out, and that's a speculation that is the new feature. The iPhone 14 new feature will include a mobile satellite connectivity and partnering with Global Star. And that's all for me.
Thanks, Redmond, Drew, and Steen. So a couple of key things from my end of town. Firstly, I want to start on the macro side. The energy crisis is continuing in other parts of the world. So overnight, there were reports out of California that their energy
Just Jessica, your microphone is distorting the sound. I'm sorry.
Oh, okay. So just 1 second. Good. Now, is it better? 1 second.
Yes, do you have another microphone to use? Oh, maybe.
1 sec. Testing 1, 2, 3. Apologies, everyone. We do have some exciting things to tell you, so just bear with us. We're just getting our main man in IT to help us. 1 sec.
Jess is still setting up, perhaps. Maybe we could also talk about I think the UK situation. I mean, we do have the new PM coming in today, and the sterling dollar seems already to be below the 1.15 mark. I think possibly heading to 2-decade lows there. But I think, yeah, the key situation again there to watch besides politics would be obviously the difficult economic situation that we are in. And last week we had Goldman Sachs saying that inflation could reach up to 22% levels in early 2023. So that obviously means that the cost of living crisis is certainly getting worse from here, and I think that will continue to weigh on the growth outlook as well. But Redmond, have you heard about this typhoon that is now hitting China, and do you think it could possibly be a big issue in terms of more I think impact on economic growth, and especially that we are now getting closer and closer to the CCP meeting in October?
Yeah, I mean the typhoon is I think it's makes Shanghai at least to I think you shut down the terminal. But I think those things, of course, the impact would be rather short term. I think the key thing is still, of course, is pretty much as on the COVID situation. That would be much more important. Yeah.
I think Jessica's back up as well, and let's
back in the land of living. Can you guys hear me?
Absolutely,
yes.
loud and clear now.
Thank God for IT. All right, so I was just touching on the energy crisis around the world. So Steen and True already discussed that, but I'm not sure if you're aware there's an unfolding energy crisis in California, and we'll tell you why it's relevant to other parts of the region in a sec. But just be mindful that there are wildfires sweeping across California at the moment, and what this is triggered is the Californian state government has asked for uranium power supply to be on standby. So this is a reason that we think investors might continue to look or keep on watch uranium stocks, and there's a uranium ETF. URA is one that comes to mind, the largest uranium ETF in the world. That's something to consider. Also consider what it does mean for, I guess, food prices as well. We know almond flour is important for those who have allergies. Why on earth am I talking about almond powder or flour? California is home to the largest almond supply in the world. So now California's almond supply is at risk, as such the world's. That's something to keep in mind. Also, the second thing that I wanted to touch on is amid the energy crisis, the coal futures price in Australia today has hit an absolute brand new record high. And as a result, this has caused Australia's largest coal pure play producer, Whitehaven Coal, to hit a brand new high as well, on expectations that their forward earnings will continue to grow at a record pace. For all other companies to look out for our daily note, which is published and on our website. The final things that I wanted to touch on are very local, and that's about Australia's RBA. So RBA, Australia's Reserve Bank of Australia, is expected to hike interest rates next week. The futures say that we can expect a 0.4% hike. The market's only thinking 0.25% hike. Either way, we are starting to see a property, I guess, cracks emerge in potentially a property crisis in Australia. Why on earth would we be talking about a potential property crisis? Well, Australia has one of the largest debt to GDP ratios in the world, so about 130%. So for investors, we think that if the RBA does continue to hike rates, as the futures expect rates to peak next year at almost 9%, that means that 50% of Aussies who have mortgages will be at risk, and as such, we potentially see a credit crisis unfolding. So we're watching property stocks, banks with large debt exposure, and also property REITs. For traders, if the RBA hikes more than expected tomorrow, there's a couple of currency pairs that we're watching and that look really interesting. The AUD euro, and also the AUD CNH, because we know China's bank is continuing to stimulate their economy, but they're likely to cut rates while Australia is likely to hike rates. So there's two currency pairs to watch, AUD euro and AUD CNH. And then, of course, the next day, on Australia. In Australia on Wednesday, we get GDP data, which will be really interesting to watch as well in relation to those currency pairs. Also keep in mind that Australian retail data is at an absolute record high. So that could be bolstering the GDP data, but slowing it down is construction activity and property spending is grinding to one of its slowest paces since the 80s. And that's it from me. I think we'll leave it there, but I just want to say, please don't forget to tune into our APAC Daily Digest that we put out every day around 9 a.m. Singapore, Hong Kong time, which is 11 a.m. Australian time for those Aussies tuning in. And also keep in mind that we do have a spotlight that goes on the website. So this video recording will be available to watch in post-production on our website. Any questions, feedback or comments, please reach out to your sales traders and or anyone else at Saxo. But thank you very much to our special guest, our CIO, Steen Jakobsen, who's here from Denmark. And yeah, looking forward to chatting to you guys and hopefully seeing you at our events over the next several weeks across the Asia Pacific.
Happy trading week, and we'll tune in again next Monday. Thank you.
Thank you. Sorry about my IT issues as well.